Welcome back. You're still tuned into Trading Hour, and let's get a conversation going on the market. Satish Ramanathan, CIO of Equity at JM Financial Asset Management, joins us now. Satish, thanks a lot for joining us and welcome to the show. What do you make of this, solid momentum that we've seen in our markets around over 5%, right, in just a span of 1 month or so? What do you make of it, and how much higher do you think we can head from here in just the near term? I'm talking about maybe a couple of months.
Thanks for having me on the show. A couple of things. I think the market has surprised us on the positive side as well. But a couple of things that which we did not factor in is the FII inflows, which have been very strong, and also the mid-cap and small-cap rally, which has also been fairly good. And the reason why we attribute the mid-cap and small-cap rally is the growth and the value paradigm that mid-caps offer, as also some of the small caps. And I think this momentum is set to continue, though there may be a break once in a while. So overall, I think the economy is in fine fettle, fiscal deficit is under check. So all the macro parameters seem to be working for us as of now.
Satish, hi, Rima here. I remember our last conversation and you were very bullish on defense names like HAL, BEL, and if I remember correctly, they were even a part of your holding. But even from the time that we've spoken, these stocks have gone up even more, 20-30% in the last couple of months. Are you still convinced about more upside in these names, or do you think the rally has gotten a bit overheated, projections are too optimistic, and we could see a period of earnings downgrades for some of these defense names?
Not particularly defense alone. I think even the capital side, there are production bottlenecks coming through. There are also many, even though the order book is strong, production bottlenecks could cap the kind of earnings momentum that the market expects. So yes, one needs to be cautious because this could disappoint as well, because that's something which we need to factor in. But the tailwind is extremely strong. I mean, the more we talk to companies, the more we interact, I think the conviction on the tailwind is only increasing, not decreasing.
Could you expand a bit on the production bottlenecks faced by, which capital goods companies, which are the segments, what's causing it, and what's the extent of the business loss momentum?
So several things. I mean, when we talk to companies, they indicate that even motors are in short supply, certain grades of gears, all of these kind of things. So it's difficult to quantify, but what we kind of understand is that there are bottlenecks because of the momentum that we have seen in CapEx, and that could probably lead to a little bit of a cool-off as well.
Okay, got that. Satish, today I definitely have to ask you about the financial space, right? We've seen Jio Financial demerge from Reliance Industries. What do you think about this? And, broader question on how do you really see this space moving forward? Do you think there's going to be a big disruption that comes through with Jio now being a separate entity?
I think with Jio coming through, we need to wait and watch about their strategy, their focus areas, and how they will actually penetrate the market and grow there. We have very worthy competitors already in place, the top 5 banks, some of the NBFCs. I think we need to watch the strategy as it evolves. But Jio Finance, because of its heft and because of its vision, can be a worthy competitor, and we need to see the contours of the competition as it evolves. So it's too early to say anything as such.
But would you recommend perhaps profit booking, or would you recommend not holding any of its competitors, whether it's a Bajaj Finance or a Chola, any of these other NBFCs, due to the potential impending threat from Jio Financial?
From a market sentiment perspective, maybe there is an issue on the established players. The incumbents may face some market pressure. But on the ground competition, I think many of these companies have worked very hard to create moats, which will be difficult to penetrate and difficult to overcome in a hurry. So any competitor with a significant balance sheet is something to be watched out for. But all of the companies that we are talking of, whether it be the top 5 banks or the NBFCs, have also created market presence, which will be difficult to take off in a hurry. So it's a wait and watch.
Okay, got that. Satish, we'll leave it there today, but we do hope to have you back on the show very soon so we can discuss a few more sectors as well as the earnings which have been coming through. But with that, we're going to get into a short break.